Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, yes, it's certainly World Cup fever across the world, but before we get into those important matters of the day, let's take a look at some financial results of two stocks on the manufacturing sector. And today we're talking about National Flour Mills, NFM, as well as Angostura Holdings Limited. Now, both groups would have reported some decrease in earnings despite revenue increases. Let's take a look at how both groups would have performed and what investors might expect in the coming months ahead. Turning firstly to Angostura Holdings Limited, and for that 9-month period ended September 2022, the group reported an earnings per share figure of 44 cents, a modest decline of 2.2% from the 45 cents reported in the prior comparable period. Now, notably, revenues were up 16% from $613 million to just over $711 million. And gross profits were also up 17.2% from $291 to $341 million, which is a good sign and a good indicator that the group is able to manage costs at present. However, there were increases in operating costs, which led to a modest decline in profits for the period from 92.3 to 89.6 million. So again, that 2.9% decrease in profits over the prior comparable period. Again, in terms of revenues, I think Angostura Holdings Limited's revenues have been trending higher, and we can see that a 7.1% increase in revenues over the 9 months of 2020 was followed by a 6.8% increase in 2021, and subsequently a 16% increase in 2022, as traditional revenue-generating channels would have reopened, as well as some price increases taking effect throughout the course of 2022. So that's certainly a positive story. However, that has not translated into improved earnings quite yet for shareholders in terms of profit margins. As we can see, gross profit margins will be able to be maintained. Again, a good indicator of cost control management on the cost of sales. However, operating profit margins would have declined from 18.2 to 15.7%, and profit after tax margins from 15.1 to 12.6%, an indicator of some increase in overheads over the comparable periods. And for investors, there has been a run-up in the price of Angostura Holdings Limited, but that has not been just met quite yet by a pickup in earnings. And as a result, that price-to-earnings ratio, which is the price that investors pay relative to every $1 of earnings generated by a stock, would have increased from 22.2 times at the 9-month period of 2021 to its current level of 30.6 times. So a little bit more expensive for investors looking at Angostura on a trailing earnings basis. Now, that being said, we are moving into the seasonally excellent fourth quarter of Angostura, so perhaps earnings may catch up as we go into this fourth quarter. Nevertheless, at the price of $23.26, Angostura is trading at that 30.6 time multiple, which is well above the sector average of 22.6 times, with a dividend yield of 1.5%, again below that sector average, excluding special dividends of 2.8%. So on the basis of revenue growth, continued revenue growth, lower margins, however, and relatively high valuations, Bourse is going to maintain a market weight rating on Angostura for the time being. Turning quickly to NFM, well, National Flour Mills would have recorded a loss per share of 1 cent compared to an earnings per share figure of 3 cents in the prior comparable period, so a 147% odd decline. Revenues, like Angostura, were up around 16% from 320 odd million to over 371. Gross profits, however, were down 5.8% from 63 to 59.3. Again, some cost of sales challenges for NFM in terms of rising commodity prices, and increased overheads also would have led to a loss for the period of $1.7 million compared to $4.1 million profit in the prior comparable period. When we take a look at revenue and revenue growth for NFM, again, a very positive story in terms of revenue, with one of its strongest periods of revenue growth in that 9-month period of 2022. Compared to 2021 and 2020, of course, with a 16.1 odd % revenue growth. However, profit margins have continued to decline, with gross profit margins falling from a high of 27.5% in that 9-month period of 2020 to 16% in the current period, and profit before tax margins also declining to just 0.2% from that high as well in 2020 of 9.3%. So certainly some challenges for NFM going forward, and with commodity prices and commodity markets continuing to be quite uncertain, that could linger for the time being. So at a price of, well, it's actually $1.51, NFM is trading with that loss, it's trading at a negative price earnings ratio and has not paid a dividend for quite some time, compared again to that sector average of 2.8%. So on the basis of those increased revenues, higher input costs, and lower profit margins going forward, Bourse is going to maintain a market weight rating on NFM for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 2BORSE or 226-8773. Email us at invest@boursefinancial.com, or you can check out our website, bourseinvestment.com, where all of our research is absolutely free, and catch us in today's business section of the Trinidad and Tobago Guardian newspaper. Have yourselves a wonderful investing week. For the football fans, enjoy to the max, and we'll see you next time on the Bourse Report.